This is our session 1 on how to make money in stock market, in forex market or in commodity market. Stock market is the other name for an equity market or share market. Forex is where various currencies are traded. Commodity markets are like where metals are traded, gold is traded, silver is traded, and various agri commodities are traded. So in any of these markets you can apply the technique which I am discussing. But prior to starting this technique, prior to starting my explanation on this technique, I want you to understand that there should be some basic understanding of how a candlestick looks like or what a chart is. If you understand, even if you know how it looks like, I think that is a fair amount of knowledge which is required to understand Heikin technique. So let's dive in. What is a Heikin technique? Heikin is a Japanese word composed of two words, Heikan, which means average or balance, and Ashi means foot or bar. What it says is that it is basically a bar made up of average prices. How the construction of a Heikin bar is done mathematically, how it is constructed, I will discuss in video 3 or 4, but that is not that much important. What is important is how to interpret this. So Heikin is an average, it shows an average price and it is a candlestick bar. What sort of average price? It uses high, low, open and close of the previous day, as well of the previous day or the previous period, and it uses open, high, low and close of the current period to construct a Heikin bar. So now let us see how a Heikin bar looks like. There can be two types of Heikin bar, a bullish Heikin candle or a bearish Heikin candle. In a bullish Heikin candle, you would see that there would be a green box at the base and a wick at the top. This is a clear indication of a strong bullish Heikin candle. And if there is a red box and a downward wick, then it is a clear indication that it is a bearish Heikin candles. More candles patterns, more candle types or structures will be discussed in the second video, and what are their implications in understanding how the trend is behaving, that we will discuss in the next video. This is simply an introduction to how a Heikin candle looks like. Now, the question is, why do we talk about Heikin candlesticks or Heikin chart as better alternate to a candlestick chart, or why should we use a Heikin chart? Heikin chart smooths a lot of irregularities with a normal chart, which a normal chart does not do. So let us look at these differences and then try to conclude how it smooths these irregularities. Now this is a picture of a normal chart, and I want you to look at this circled area. You see how uneven is this circle area. There is a close which is very high, low in the first bar, then there is a green bar which has got upper and lower wick, then there is a long red bar, then there is a red bar, and then there is this wicked dragonfly type of a doji, or I will say a small wick body candle. So this is how uneven or irregular looking a candlestick chart is. But if I look at the same price formation on a Heikin chart, see how smooth it looks like. It clearly tells you that there are red candles, and each red candle is formed at a lower level than the previous candle. If the close is lower than the previous candle, it is moving down. There is no irregularities. One candle is starting from the body of the other candle, and that is how they are moving down. And they are clearly indicating a trend. So this smoothness comes in a Heikin chart, which is not available in a candlestick chart. Let us look at some other example. Let us look at this trend. See how uneven it is. There is a green candle, red candle, green candle, red candle. One can't make sense whether we buy or we sell basis these candles. But if we look at a Heikin chart, it clearly says that this was an uptrend from here, this was a downtrend from here, there was a small consolidation patch, and the downtrend continued. So Heikin Ashi charts were far more regular, far more smoother than a candlestick chart, and this is the advantage of a Heikin Ashi chart. Since uniform, since it works on average prices, it uniforms or it makes the irregularity uniform in nature. It is able to give us lot of benefit. First benefit it is able to give us is it is able to give a picture of a trend very clearly, and second is it tells us about the consolidation period openly. Now these are the two very important things, because if a trader knows that the market is trending up or the market is trending down, then he can buy or sell depending upon how he wants to participate in the trend. And if the trader knows that there is no trend in the market, or the market is trendless or is in a consolidation period, he should stay away. Only these two decisions he has to make money in the market. And these two decisions can be very pictorially, very simply be shown, can be shown through a Heikin Ashi chart. So before we move into how a trend looks like in a Heikin Ashi chart, let us understand what a consolidation period is. A consolidation period is a period when the prices move in a range. When the prices move in a range, that means they are not trending. They are not going up. They are not coming down. They are just hovering between the two boundaries. I will call it the upper boundary or the upper wall and the lower wall. And it does not break these walls, it hovers in between, and if anybody trades in between this, he will surely make losses 9 out of 10 times. In one time he may make profit, or two times he may make profit, but mostly he will make loss, because market is trendless. It is very uncertain which way it will move within this space. So we should avoid a consolidation period. And a Heikin Ashi chart shows us the consolidation period, not only shows us the consolidation period seriously and clearly, it also limits the size of the consolidation period and tells when the trend R's have started emanating. Let us look at this in the chart below. This is an example of a simple candlestick chart, and this patch, colored patch, is showing a consolidation period. You see there is an upper boundary and a lower boundary, and price is hovering in between this. As compared to this, when the price was falling one after, each candle was falling one after another, it was a trending period. I will call it, it was a trending period. Here the candles are not following a line. Neither they are following a line to go up like this or following a line to go down, but it is in a haphazard up and down fashion. So this is the consolidation period, and in a consolidation period, never trade, stay away. So if we look the same price pattern in a Heikin Ashi chart, how will it look like? The same chart seen in an Heikin Ashi period candles is this. You see the same long period is shortened by this much size only. Only this much patch is showing in Heikin Ashi that we are under consolidation, and after then it is giving a very smooth indication that a trend has emanated. Yes, the trend is not strong as per the Heikin Ashi candles here, but nevertheless there is a trend. So consolidation period, viewing consolidation period becomes very clear in Heikin Ashi chart, and so it saves lot of losses to a trader. And what is the trend in a Heikin Ashi chart? Let us look at a trend in a Heikin Ashi chart. This is a Heikin Ashi chart, and you see the prices have climbed up. There is one candle after another candle. Each candle is opening, closing at a higher level than the previous candle. So we will say that the candles of Heikin Ashi are up climbing here, or it is an uptrend here. Similarly, each candle is closing below than the previous candle. We will say that Heikin Ashi candles are in a downtrend here. So it shows the trend so smoothly and clearly that anybody can trade. Any novice can trade. You don't need a rocket science to understand when to buy, when to sell. If you buy it somewhere here and exit somewhere here on the formation of this red candle, you would have made from 424 to 432, 8 rupees on this per unit of this trade on Bharat Petroleum BPCL. In a matter of, it is a 3 minute chart. The 1, 2, 3, 4, 5, 6, 6 and 7. 7 into 3 is in 21 minutes you would have made 8 rupees per stock. Is this bad? Just not at all. And how clearly we can see it in a Heikin Ashi chart. So this is all for the today's session. In the next session, we will study how to apply Heikin Ashi chart in an ascending trend. Till then, thank you.